Hello, everybody. Kirk Spano and Scott Shooter Henderson for the Major Markets Weekend Report. And Shooter, how are you doing today?
I'm doing wonderful, buddy.
That's good.
How was Vegas?
Vegas was good. Had a good time. We went to Mr. Chow's for dinner on my birthday at Caesars, and I will give it a 4.5 stars out of 5. The service was awesome. The food was awesome. I think that the surroundings were really good. I think it could have been just a little bit better. So they could have given us less food because, my God, we walked out of there stuffed, which is weird for a Chinese restaurant, right?
Right.
We had tableside duck roast or roasted duck, and the chef makes it. He brings it out. He carves it for you. It's a pretty neat experience, and I will tell you, good roasted duck is just unbelievable. So if you are into duck, go to Mr. Chow's at Caesars, and I don't think you will be disappointed. All right.
I'll
What do
put
you
it
got
on
for us?
my to-do list next time I'm there.
I mean, if you like Chinese food and you want to have a couple things that are a little bit more traditional Chinese, they have it. And we had a few things, but that roast duck, I tell you, just unbelievable. For 128 bucks a head, we got basically 6 courses. And oh my gosh, we were so full afterwards. And normally 3 hours after eating Chinese food, I'm eating again. Not this time, man. I didn't eat for 24 hours. So, all right. What do the major markets have for us this Super Bowl weekend?
Well, I'm going to start with Bitcoin.
Okay.
You got the chart? Hopefully somebody
Yes.
Fantastic. All right. So we're in breakout mode here. I think we take this out, this 49.
Okay.
Now, I want to consolidate down for a little bit. Now, this has a lot to do with my RSI work. And, I want to go back here to this leg here and just, notice this structure here. And then we had a second mound and a third mound. This is and basically as Elliott wave steps, you get mound, 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 and then another step, and then it's mound, mound, mound. So in my opinion, this is mound 1. So I'm going to go back here and I'm just going to steal this impulse leg here for a second. And I want to come here and just plug it in right here, right?
Okay.
And, that puts us at 77,240. However, when I measure it, otherwise I get 84,539. And that, in my opinion, is in play now because of how shallow this back test was. Okay. We went to, consolidation, building a base to euphoria. And if you look at the assets going into the ETFs, it was huge. IBIT had in one day had 8,927 Bitcoins basically bought on this FOMO. So when the breakout happens, I think we could have 3 times as much volume coming. Yeah. That's my thought. So I think we are in this run now.
So that kind of plays into my thesis that as adoption picks up, as financial advisors get in, as FOMO develops, this can just rally and rally. And if we really get to the 5 to 10 trillion in global monetary assets in Bitcoin, even 100,000 will be cheap at that point. So this is really, to me, not a super cycle, right? This is just the current cycle.
Right.
And the super cycle could play out way higher.
Yeah. The super cycle is, this is our C. Now, here's the challenging part. This ABC could become a 5-wave, becomes an impulse. It's off the map. We're talking 1.2 million.
Yeah.
It's just huge. But now I wanted to just briefly, I'm going to go there because they moved well, and ironically, I have negative counts on these, but I want to jump over to the miners for a second. I want to go back to Bitfarms. Our last entry long was at 193. We're up at 270. Anybody who took that, nice, solid, good play. And then we also had taken Riot. Let me jump and get to my right time frame. Hopefully it pops back. And I really like the look of this. The move that we had on this, if we actually get this breakout here, we're going to 26 bucks pretty doggone quick on this one. Right. So I'll leave there. And then I want to jump over to GBTC.
Okay. Well, make sure you look at Marathon too. Because
Marathon's
the one that I took.
Okay. Marathon is great. The only thing I don't like is the fact that it's in a downtrend here, and we've got to basically take out these highs. We take out those highs, the count to flip.
Yeah.
Which is why I didn't go into it. And I had to wait for Riot's count because one of my rules is I wait for the count to change before I jump on board. And sometimes I miss a little bit, but I miss this kind of flush, kind of scenario.
The reason I took Marathon
instead was a good choice.
Well, but the reason I took it is because I thought it had the most snap potential to the upside and for the chart to potentially flip. and
Yep.
I just like the company better. So for me, liking
I
the
agree.
company more was the reason to do it because of their energy equation. So
Yep.
I do think this chart flips. I think we get new all-time highs. If you are a client of mine and you have stocks, you saw that I took about a 1% position and sold puts. So it's not a huge position. I didn't want to overdo it, but I have been, moving into more Bitcoin related investments since, November of 2022. And, I don't think that we can talk too much about the fact that since 2016 or 17, Bitcoin has been the top performing asset class, including everything, even the mega cap monster Magnificent Seven stocks. Bitcoin has outperformed. So if we're right and Bitcoin adoption is going to get into the global financial system, which certainly appears to be happening, man, it could be the top performing asset for quite a while, wouldn't you think?
Yeah. I see no reason because it's being adopted outside the United States as well. And see, that's, where you have that, true scarcity in a product. I think it's just jet fuel. I mean, that's just my thought. But, I'm going to go back to Bitcoin. I don't know that we get a great next entry here. Right now I'm seeing about 46,844. And now, just for those folks who don't follow my charts all the time, when you see a faded out label, that was an event that I marked on the chart, and I'm keeping them there sort of to show a history of what I see. So it helps you, decide how accurate the chart is versus not, kind of thing. So, we had a next entry long down here around 34. And that's what I mean by this retrace here was very shallow when it came in at 38,518. And, then it took me a little while. We had to get back and had to hit my rules before we said, okay, now buy. It's time to get back in right here because we were looking for that drawdown. And unfortunately, just how the process works, sometimes you're dead on with the drawdown or the downside, and sometimes you have to take a little heat versus not wanting to take a little heat kind of thing. So, but the idea is to have a good average in off of the Elliott wave counts. So by the time you get the breakout, you've got a solid full position in here. And that's, basically what I'm saying here with Bitcoin at that breakout line. If you don't have a full position, that's where you want to put it on. So right here at that 49,000 is, if you don't have a full position, you want to jump on board because we're going to just pop. First resistance is up there April 21 at 60,000. And there's nothing there in between there.
Yeah. Well, those air gaps, on upside or downside, when there's an air gap in the chart, usually we blast to one end or the other. And this air gap is up in the all-time highs.
Yeah. And I think it'll be quick because it's going to be a scarcity event because there's only if you look at the sales on the exchanges of Bitcoin, they're actually selling pretty much all the Bitcoins that are being sold. So as soon as we hit the point where you got 10,000 buyers and there's 5,000 Bitcoins for sale, goes through the roof. And we really have only had 3 scarcity events, and I can go back in time here and here. And if you look at the sales on the exchanges that occurred there, basically right around here, we started seeing a depletion. Nobody wanted to sell. And the same kind of event happened here. Nobody wanted to sell. So as soon as that event occurs again, unless the federal government comes and sells something or some big whale does, but honestly, with this look, if I had 10,000 Bitcoin, I'd have the best analysts in the world like me to tell me which direction it's going to go. And I wouldn't be missing it. I wouldn't sell it. Would you?
No, especially not with BlackRock telling everybody to buy it.
Yeah, that's true. Well, let's jump over to the dollar. And, it's ironic, I really can't show it on the weekly, but I want to go down to the daily just for a second so I can explain what sort of happened this week. We were basically flat. And, whenever the dollar is high, it should be a headwind for indices. So think about the rally that we've just had. We're pushing with a headwind. And that really is the message that I want to get across, because if we come in and look at all the sectors as well at the same time, we're starting to expand on that. And I just want to jump over. I'm going to jump into the ETFs real quick and then go back through the indices. I want to start with IYT. Now, we're on the verge of breaking out. Now, transportations historically have been a growing economy. In other words, we're heading into a booming cycle. That typically indicates it. Now, if we jump out, there's a couple better looking charts. Now, I had to switch over and pull data from another source, so I've got a secondary symbol I have on these labels. But First Trust National Transportate ETF is the best looking chart I could find in the sector. So I'm looking for a pop on this from 30 to 37 on the intermediate wave and a back test maybe 34. And then we have a huge rally up here to maybe $62. So that implies to me, really supportive of your thought that we're going to have some FOMO behind us going into the next couple of quarters at least. And that's sort of what I see there. But let me jump back to the SPY and sort of talk about where we are. Now, I do think this primary wave 3 at 513.12 is a crossroads for us, because we may end up having, if you look at the history of the tape, we had very shallow retraces, and this was a heavy one. So, if this actually is a leading diagonal, this intermediate wave, and our 5 is this shallow, I don't necessarily think so. But notice also the length of wave 1 and the length of wave 3. So, historically, when you look at Elliott wave counts, wave 1 is pretty equal to wave 3. So, we could get a nice little push up here, maybe to 570 on the SPY, if we really do that, get that type of FOMO play out. Now,
do we know anybody who predicted 570 on SPY, like on New Year's?
Yeah, I think his name was Kirk Spano.
Yeah, I'm pretty sure it was that guy. Okay, just check him.
Now, and you also mentioned on the next dip, you want to be fully invested. And I totally agree with that. I think seasonality, and we talked a little bit about this last week, and actually maybe even a little the week before. March 22nd is the date that I'm just constantly going back and refreshing as I'm looking at the data, where I think we hit our seasonal low in the S&P for 2024. That's sort of the target date. So, and I'm going to I'm focusing on that point, and I'm looking at all the different indices and stocks as well as where the counts support that. And
so when are you saying you think we get our dip?
March 22nd. So as soon as we get this 3, we're going to hit our seasonal low for 2024 off of this. So then we jump down to 475. And I realize that is an equal ABC. I mean, it could become extended or elongated. It just depends on how much they want to sell it. And, one thing that we have seen is the FOMO that comes into this market. It's been aggressive. I mean, you don't want to be on the wrong side of these things when they're moving. I mean, we've had a number of names, especially mid caps and small caps, have just done awesome. I mean, some of the guys I know that really are very aggressive swings. Like I'm talking 30 positions a day. One of the guys I stay very close with, man, he's up $27 this week on option contract. I mean, that's just killer. I mean, it's the best week that he's had in 13 years as far as the P&L. But he's chasing a huge number of small caps into earnings, which is very risky. I mean, we've already seen that. It's a hit or miss kind of thing. So he's just been on the right side of luck, as I put it. But, I think that FOMO has a chance to head to the upside pretty aggressively.
Can I interject here?
Jump.
So in the macro dashes, I talked about how I think we probably get some correction in March, April, May before the Fed really starts pumping money back into the system again as tax receipts drop. So folks, Shooter and I look at things from different angles. And when we come up with about the same answer,
it's usually right.
It's so far in the last few years, it's been pretty good. And so if him and I agree, you should really pay attention, I think. And, when we disagree, I'm usually right. But but no, really, those are times when maybe you sit on your hands, right? So, right. But when we're on the same side of a trade, coming at it from different perspectives, just like with Luke Grumman over a Forest for the Trees, I don't like his general underlying theory a lot of times, but if we get to the same trade from different viewpoints, probably pretty powerful. So right now, we're all on the same side of this, is buy the pullbacks.
Yep, I agree. So let's look at the NASDAQ here. So, ironically, that, even with the Magnificent Seven not fully participating, okay? And, we were watching that FOMO run into, 5K on the SPX. And, they kept pumping the laggers to try and get to that number. And the ironic thing is many of them didn't get decent back tests. So, these all-time highs, and I'm just going to come in here and I'm going to bring in the count here, wave 1, wave 3 is typically your longest wave. So again, there would be nothing that would prohibit this from shooting up to 522 if they can get all of those Magnificent Seven running. In other words, the rest of the NASDAQ is flat or breath positive, right? Not high growth, but the Magnificent Seven runs. We could see that kind of move here as well. Now, I want that kind of catalyst for that exhaustion into March 22nd. I would love to be up there at 522 on March 15th, let's say, for example, or March 10th, because the drawdown should be quick. So if it took us 90 days to get up, the drawdown should occur in 5 to 9 days, roughly. So if by the 1st of March, we start seeing that FOMO come into this, that really is going to be our sign where we want to start trimming into that a little bit or selling some cash.
Why does the correction only take a week or two?
Yeah, because it's faster. It always is. I mean, very often do you have a slow grind down like this. It's very often. Most of the time, it's quick, these type of corrections historically in the markets. This is a very unusual cycle where, this leg up, typically what occurs is 50% back occurs with about 1/17 of the time frame that the whole leg occurs. So having this kind of grind down has not been something that historically is there. It's always usually a catalyst. It's not this, we had I think it was more that we had a lot of companies that just got so walloped with COVID that, it was where, transportations is a great example, and that one thing transportation could be in the back of my mind is that it's recovered because of COVID. So that might be why I'm seeing the positive look too. So that's sitting in the back of my mind. But when a drawdown typically occurs, it's aggressive. It's a swan event of some kind that causes most of those drawdowns. So, when you have this long progressive turn, now we could get that here. I hope not, because then for 3 or 4 months, we're just getting that constant bleed, and picking the bottom gets a little challenging, and that, you get taken out because you're, early, and we've seen that in a lot of counts with some of the names as they're failing, especially in real estate. They just bled all the way down bit by bit as the market information or the news just kept getting worse.
Right. So usually it's escalator up, elevator down.
Right. Okay. Well, actually, I'm going to say staircase up, even and slow grind up. And that's this kind of grind is, truthfully, it's not profitable from a trading standpoint because you really don't get enough of a drawdown. And on the high side, premiums is horrible. Everybody knows it's moving. So they don't want to sell it for the top price. So your spreads just get terrible. And if you enter it, it actually cuts your profits in half unless you're holding for a longer period of time. And obviously, if there's events like, the war going on and everything else in front of us, getting long has a percentage of risk, even in this kind of environment, because we still have that swan event that could just catalyst put us down. So you want to manage your risk. You want to have a certain percentage that you're working with and then stick to it. But I agree on this drawdown. I do agree that we should be fully invested on that next turn lower.
Let me throw something in then. So when we overlay the general market environment, I talk about demographics a lot. And if we think about generationally, you have the baby boomers who are generally pessimistic at this point, is what we're seeing, and they're entering their drawdown years. So you've got a lot of folks who didn't get to where they wanted to get to for retirement, and they're afraid of losing what they did get to. So you have that end of the market. But then you have all the younger generations who are still being aggressive and embracing technology and Bitcoin and things like that. You really have, to my opinion, a barbell market where when one end of the barbell gets higher than the other, you really get some huge fast shifts. I do think that long-term things continue to go up and to the right, but the combination of indexing and generational investing, the technology and Bitcoin and everything else, I think the pulls, the pushes, the swings, they seem like they're all more extreme. And I think that has been exemplified by the fact that we're seeing more third standard deviation moves and even flirting with fourth standard deviation moves, which had only happened in the Great Depression. So, now we're getting that sort of stuff semi-regularly since the financial crisis. It's really pretty amazing to me how extremes get now. And that's why, I haven't said this much lately, but some of you from a few years back will remember me saying, avoid the middle of the market. I think that is even more true today, avoid the middle of the market. And you can get some pretty good buying and selling opportunities by looking for that third standard deviation to happen one way or the other. And it seems to be occurring that way, doesn't it?
And yes, especially in the FOMO stocks. And, one of the things that I think is a big factor is artificial intelligence in the strategies that different trading houses are running, because the blocks and splits that are coming in are freaking brutal from a retail standpoint, because you don't see them coming. And, you just get like a huge, I'm looking at a monthly chart here, but even, on a day-to-day basis on the 5-minute candles, sometimes those things just, it takes out the entire range of the prior day in one wick, right? And, depending on where you're holding your stops, they're stop runs, and they've gotten pretty doggone good at those. I'm running more hard stops in my day trading than I ever have, because it just turns around and it gets my price anyways, but it's those blocks that are brutal. So, but if you look at the history in the S&P, now in 2009, we hit the third standard deviation. In our drawdown in 2015, we hit the second standard deviation. In our drawdown in 2020, we hit one standard deviation.
And that was because we had massive intervention. Where does that go without the massive intervention?
Well, it'll cross the third standard deviation in that event, right. But, historically, I mean, if you go back, in total time, we've got two tags of doesn't like to flip way back there. And the SPY is not, we've got one tag of a third standard deviation. And then the 2001 event, we had two tags of the second standard deviation, but it never crossed below. And then we just kept bleeding. But, historically, it's not third standard deviations about 8% of the time is the number that I have in my mind that I'm thinking about.
And that's for the whole index.
Yeah.
Individual stocks are hitting third and fourth all the time.
Yeah. Oh, yeah. I mean, well, look at Meta. I mean, look at what happened to Facebook.
Right.
I mean, it literally, and I go back and I look at that trade, and I'm looking at it from the lows, and I'm like, why in the hell did I see it down there? Right. So one of the things as a retail guy and a guy who, really avidly loves what he does is, I spend a lot of time on what I missed because I want to understand how I can see it next time. And the challenging is I go back and I look at my method, and I'm drilling down and Meta, and the only thing that was there was the 2 drive, but it's where, the upside, you can look at Nvidia as an example to the upside, where that euphoria just is not waning. I mean, we have analysts calling for $800 on that stock right now, but as an investor, it's really hard to jump in now and hold a position this high, because if we're wrong and it does a Meta, we're going to take a whopping. So that, you sort of have to do a mix. It was, I know one of our members didn't buy any Meta, and another guy put $500 in it. And he's like, man, I should have done $5,000. He did the $500 because that was what he was comfortable losing. And then the investor who didn't put any position on Meta at all was like, man, it never fails. If I don't take it, it rallies. It's a rocket. If I take it, it's a loser, but that's the mindset of the market. So, but one thing I want to point out here, using the Bollinger Bands with fibs here. Now, notice how we squeezed off of this low. We had that broadening. I mean, basically this whole, we squeezed all the way up. Notice how broad we are now. So this squeeze here is going to be what we see up here. It's going to squeeze all the way up until it peaks, and then it'll start broadening again right now. It's starting to tell us here that we're going to have a drawdown, which we got. Okay. So, obviously that buyer overbought status, a lot of that was taken off basically. So that pressure was relieved. I look at it like a pressure valve. So we're going to see the same thing. So I think there's a lot of upside in the Magnificent Seven. But I'm also having a hard time saying, hey, this is where we chase it, because I'm hoping that in March we get a decent drawdown so we get a better entry on some of these, because I do think you're correct. I think for the next couple of years, we end up in this FOMO rally that doesn't stop. So that's sort of the challenge.
Right. All right.
All right. Well, taking a look at the Dow. Now, one thing that needs to occur is the Dow and the Russells need to come on board really for us to have a FOMO rally. Even though you can have rotation, which has been occurring a lot in the NASDAQ, it's still been, right now, even with the growth that we've had in breadth, it's still been the same names they're buying. Very much like you talked about them indexing in different funds of what they're doing. And that's because they've been successful at doing it. They have a certain margin, so they're going to continue to do it. So we see no reason why that shouldn't change. But the Dow is approaching, another crossroads at 390.73. So we've got another $4, and then I'm seeing a drawdown to about 357. Now, and I'm going to jump to the Russells and sort of go back to the drawdown in March. Now, I suspect we get a little higher high off of this high in the Russells before we fail. That's just, I hope it's that way. I hope breadth builds, because then it'll be a quick flush, and it's great for me as a trader. No, I mean, not that it's great for investors and position traders, for me, that's the perfect scenario with these indices. But so if I jump to the SPY is going to be like hush puppy. And then it's going to be one of the last ones to roll over, I think. I think the NASDAQ is the second to last. I think the Dow is actually going to be the first. And I think the Russells leads us into this sort of this blow off top that we have, and then we turn lower. And that's sort of my thought there.
All right. So that could play out over a couple of years.
Well, yeah, it could. Yeah. I mean, I'm honestly we don't have to have a drawdown in March. I mean, it's been much stronger than I expected based on what I was following. I mean,
or the drawdown could just be a breather that refreshes.
Well, that's what it's going to be anyways.
Right,
it's just how aggressive the commercials want to bring it down. I mean, because, you mentioned Tesla. I mean, Tesla has a lot of issues related to oversupply in EVs. That's really what their problem is. And they haven't really delivered on the Cybertruck. I mean, well, it has, but then the numbers aren't blowout like we would hope. Okay. And the low cost version of the Model 3, at this point, it might be 6 months to a year and a half out still before they actually switch production to that. And they really need to build 2 more factories to hit the numbers that Elon's talking about. So, I think a good price for Tesla is $150. But at the same time, if you look at where Meta is, if you look at where Apple is, you look where Microsoft is, they're all a little bit on the overbought side. As a matter of fact, as I'm here, let me just go there. So we look at where Nvidia's at. I mean, we are so overbought here. It's not even funny. Okay. And if we look at Amazon, it's rallying, but we're also approaching a top on Amazon. We look at Google, it's one that has quite a number, almost at a breakout point, so it's got some room up to about 178. We look at Microsoft, it's a little toppy again. So I don't know if you sort of following me with the MO here, then you look at Meta, you get a little toppy as well. Looking at Apple, it's got a little more room. So, what really is on the table for me, actually, Amazon had some huge calls way out. Meta had some 900 calls, some large numbers. It was like 23,000 out there. And, and when we look at Tesla, it's not the favored child here. And there's a reason for that. And, I question, right now my count says it's bullish, but I also had a count, just totally flushing it. It's the only reason is this is switched. So we get 50% back in Tesla, maybe around 209, is where D-Day comes. We're going to know. Is it going to become a bull run with it? Or, are the commercials going to pick it up and really run with this at that point? Which they could. And that would be all-time highs in the NASDAQ. Because then they will start pushing Amazon, Google, and Apple, because they've sort of been the laggers to some extent. Even though they've been steady Eddie, they haven't been anywhere near as euphoric as Nvidia and Meta, so they're not in that whole consolidated group where they're all rallying at the same time, like we saw in early part of 21. You remember that?
Right. Well, and I think that there are catalysts for Amazon, Google, and Apple.
I agree.
Amazon, if they ever talk about splitting off AWS, and this is beyond just the general growth that all the companies show. With Google, it's more money in entertainment while holding the line on advertising, and then more AI stuff. And with Apple, it's overcoming the trepidation over China and then going into a new service-driven expansion again. Barron's featured Apple today and said it could be a $4 trillion company.
Yeah. Well,
I don't know if it should be, but it might get up there for a hot minute before it pulls back to $3 trillion.
Yeah.
So,
and it's historically based on advertising revenues, and that,
right.
And throwing that in there, Meta has had that TEMU, which did that. They've like started this. We all get the things on our phone, I'm sure.
Right.
That's from their original capital raise. Okay. That is going to stop. That's going to slow down. Now, if you look at the the advertising space in all of the Magnificent Seven, it's not been extremely robust.
Right.
And the cloud has not been extremely robust. That's why Google rolled. Okay. So once that TMU revenue wears off for Meta, that also, I'm thinking it sort of corresponds with that March 22nd as well. I'm just thinking they have to slow down because otherwise they're going to, blow their, what capital they have, and they aren't going to be able to maintain. They're going to have to slow down to some point, and hopefully at that point they've got customers. But we haven't seen, prior to COVID, the type of growth that we were seeing in advertising revenues. So, I think that's going to weigh. That's a factor too. So we sort of need a boom, which is why transportation is kind of exciting for me, because it's telling me that a lot of products are heading to market. They're going to the retailers. And stocks are going to get restocked. Our shelves are going to get restocked. And, maybe the consumer sees a little pump in real estate, because they're expecting, here in Texas, they're expecting a 9% growth in 2024 now. And that has a lot to do with immigration. And, the numbers that you're pointing out as far as jobs, as far as the baby boomers rolling off the cliff, that's going to be a huge factor, which is just going to foster more and more, immigration. And, what just happened in Congress as far as not passing new immigration legislation, that means we might jump to 4, 6, or 8 million immigrants in the next 5 years, which, not jumping too far off base, it's going to have a huge play out factor in real estate value. So, we could see another real estate boom off of that. And you brought up the areas that you like as well. So just imagine, the scarcity, not necessarily comparing it to Bitcoin, but we do have a scarcity because we now have the hedge funds being large holders in residential rentals. And, consumers, there's not a lot of choices, even today with the number of listings. The reason the consumers are migrating towards new construction is because of the interest rates. Well,
right. Why I'm doing it. Well, I'm doing it because I don't want to buy an old house and then remodel it when I can just build a new one for the same price.
Yeah. Well, every house I've bought in the last 17 years that's been my primary residence has been new construction.
Oh, really?
Okay. And never once have I lost money. It's like, this one, I think I spent 123 and it's worth 305 now. It's been one of the best investments in my life, to be very candid, besides what I invested in learning how to trade. But
right.
Right. Let's jump over to TLT. Now, here we're at a crossroads because the count says we're bullish, but I'm bearish because I don't think the Fed is going to cut. If they don't cut in this next meeting, or they don't give us a roadmap to cut, and they're going to say, in my opinion, the Fed has no reason to cut yet. They need a catalyst. And I don't know that commercial real estate happens that quick, because when a bank gives a loan on commercial real estate, the LTVs are low. So as long as their balance sheet can absorb those lost payments, they have enough revenue to offset that, it's as you were. They're just going to hold it and wait, because I've seen that in other sectors, like different areas, especially in Florida, because we've had booms and busts in commercial real estate. And then I've seen it in Alabama. I've seen it in Georgia. I've seen it in California. I've seen it in Nevada in the retail space. And I'm even seeing it a little here in Texas. We have more vacancies here than I've ever seen in the retail space, but it's still solid. It's not 10%. I bet you it's not even 7% market wide. And I would suspect for the market to actually get in trouble, we would need to push closer to 15% vacancies in large retail market, the office space market, for us to actually start seeing a drawdown there. So it might not even be in 2024. So, looking at this, the longer the Fed does not cut or does not give us a roadmap to cut, I think the more that we head to the downside. And my target right here is still 50% back at $86. However, my prior count, which I haven't faded that label yet, I got to have a reason. Notice how we are below our wave 2 for the bullish leg. So that is a bias towards the bear side for me. So at this point, I'm still sort of waiting to see how it plays out, as far as when I want to get long.
It looks like an ABC correction to me.
Yeah, it is. Exactly. Well, and I can actually show you exactly, you must have read my mind. Did we talk about that?
No.
Right down to that 91.
It looks like an ABC to me. Yeah. I talked about this, I don't know, a month or two ago. Because I sold my TLT at like 96, 97. And I mentioned it, 3 times now? And the reason I sold it is I just looked, I think there's a leg down. I was not in the camp that we'd see low 80s again, but I think we see 90-ish again.
Mhm.
And for people who like to have some money in bonds, if you're already in TLT, just ignore all this at this point, unless you really want to get, trady. But if you're not in TLT and you'd like to be in TLT, then buying it around 90 based on some of the charts I showed in the macro dashes probably makes a lot of sense.
Well, you can look at the labels, look at the Bollinger Bands with the fibs there, and it basically gives you a roadmap of where your entries should be.
Yeah.
As far as scaling in or cost averaging in,
Right.
So you've got, this would be a second standard deviation move down to 91, be a third standard deviation move down to 89. So, I mean, on a bad day, it goes to the bottom of our support band, down around 87, and gives you a shot at 3 entries. So, I mean, from a structural standpoint in setting up the trade or the investment, however, whatever you want to call it, that would be the map I would look for. If I was just looking at getting an entry here. So get a starter position in down around 91, or if it breaks out, that's, the challenging part. If it breaks out above this 23, then you got a full position on long.
Right.
And
so my thoughts on TLT are this, and people can take it or leave it, is I'm avoiding it short term, at least until it's clear to me that the stock market rally has played its way out and the next FOMO rally in Bitcoin has played its way out. I just don't have a lot of room for TLT right now. Where I think I'm going to add it again is near the end of a bull market rally.
Yeah.
And because I do think the next recession later in the decade will be a doozy, and it was going to have to do with the baby boomer retirement. So it's not going to be run of the mill, 2 quarters down, everything's great. It's going to be a year and a half or 2 years or 3 years of dealing with the transition and all the politics that'll go into how they fix things for the boomer retirement. In the meantime, I don't think TLT can outperform stocks or Bitcoin or real estate. But if we have a price of TLT under 100 2-3 years from now, and stocks and real estate and Bitcoin are all up substantially, and it looks like the economy is about to turn over, that's where you take profits on all your risk assets and you start scaling into TLT, because when they have to drive interest rates back to near zero, it'll scream higher. It'll be a lot like the financial crisis when treasuries screamed higher during the financial crisis.
Sounds good.
My opinion. I could be wrong.
Heck, I've been wrong more lately than I like to admit.
Yeah. I just think the boomer retirement crisis is coming. I don't think it's for a few years, but I don't think we've planned for it all that well. There's been a few things that we've done that were smart, but they don't fix things until there's a crisis. Until there's a crisis, they're not going to make the hard choices and the things.
They have that minimum income thing they're trying in California and Houston. I think they're even doing it in a city in New York or in New York State. I mean, that is what I think they bring out to solve the retiree problem.
Well,
a basic minimum income.
Well, it's going to be Social Security, right? They're going to adjust Social Security. So,
yeah,
we can't really afford universal basic income, and all the people who talk about it are completely missing the forest for the trees. Until we fix healthcare, you can't talk about universal basic income.
Agreed.
So, but for senior citizens who aren't working, you got to keep them out of poverty, because if they're in poverty, that's a whole bunch of other problems. I had to deal with it yesterday. My friend Al, who I've talked about, the one who's having cognitive decline, just had to deal with a whole bunch of things that involve Department of Aging and police department and hospital system and trying to get services and dealing with the fact he's got no money left. Man, the problems with the boomer retirement, from healthcare to poverty to mental health services to everything, are coming to a head in the next 5-10 years. And hopefully on the front end of it, we have smart solutions and we don't cause a double dip of problems, right? Because we don't fix it right the first time, which should have been years ago. But the first time on crisis, then we'll have a second crisis. So I hope that doesn't happen, but it's that environment that makes TLT really interesting to me.
That sounds good. Good plan. I'm glad you shared that with us. I like that idea.
All right. Who do you got for the Super Bowl? You got a chart for that?
Actually, I was looking to try and put something up for that. I couldn't find anything that worked for me.
Yeah,
I had a little bit. I had a little bit of noise last night, so we got distracted. I didn't normally get to as much prep time as I have. So,
oh, okay. So you were planning a Super Bowl chart. You're gonna like were you gonna Elliott wave out the Super Bowl winners?
well,
I mean,
now I was
that
gonna.
would be pretty cool.
Yeah.
Do Super Bowl winners correspond to the Elliott wave chart? Then that would be neat.
I mean,
Let's invent it.
any
Let's pretend it
data
does.
can be charted with Elliott wave.
All right, let's pretend that it does. Let's come up with that.
I haven't figured out how to do that yet, though,
Okay,
because
well,
I can't.
you got a year. You got a year.
Yeah, as it stands now, I don't know what the heck's going on with TradeStation, but man, they're like limiting my data out the kazoo.
Oh,
I mean, last night I'm prepping some charts. I couldn't even get the charts to pop up.
Better than in the kazoo.
Yeah, in the kazoo. Yeah, right. Yeah, right. And then I'm trying to hook up another data source, and oh my God, I'm too old for that shit. I want to just plug and play. That's the only thing bad about MotiveWave is the data source. They need to come up with their own data.
All right, so here, let me give you some data.
Yeah.
The common wisdom in Vegas, and I talked to a few dozen people, including some people who are involved with sports books, is that San Francisco is the better team, but that Mahomes is the better quarterback. So you're going to have the better quarterback, like maybe one of the best of all time, against the better team. Who wins? And, you've seen the line on the game. It's almost flat. So there is not a consensus here. So when there isn't a consensus in Elliott Wave, what do we get? An ending diagonal?
No.
So how does that correspond?
You can either get a breakout or a breakdown.
Oh.
So
So instead of a close game, we probably get a blowout.
Yeah, not necessarily I would say this is more of a Fibonacci. So that would mean that one team on either side is going to be 14 points on either side of the other team.
All right.
Because it's going to be whether or not the defense works, okay, versus the quarterback.
All right. So
it depends on how well the quarterback plays the game.
So everybody's anticipating a close, tight, good game, which means it's probably a blowout.
Yeah. So, honestly, a straddle, 14 points on either side would be the trade.
All right. You're hearing it right there, folks. Get it on. Get your prop on. Bet on the blowout. Bet on the blowout.
Yeah.
All right.
That would be it.
Straddle the blowout. That's what I wanted. That's awesome.
Yeah. Cool.
All right.
All right.
Thank you, everybody. And
have a great weekend. Happy Super Bowl.
Yeah. And just to talk about the services a little bit, you really ought to have the $1.99 on YouTube. Really, we use that to protect some of the short-term picks and even some of the longer-term stuff. It is a great supplement, the $1.99 on YouTube. If you're a margin of safety investor and you don't want to swing trade, you stick with margin of safety. But then I think you do add the YouTube for $1.99 a month, just so you get the flavor, the ideas, and you can help track what we're doing better. It's a cheap, efficient way to get that. If you want to swing trade, you have to make the commitment to it being a part-time job, and then you go over to Rare at Fundamental Trends. So if you don't want to swing trade part-time, 15, 20, 25 hours a week, stick with margin of safety. But if you do want to swing trade, then Fundamental Trends Rare is the place to be. If you only need growth stocks, then Sustainable Growth at Fundamental Trends is the place to be. But if you're swing trading or a growth investor, probably Fundamental Trends. If you're a retiree who doesn't trade much and you want the option selling, margin of safety is dandy for you, but still do the investing 2020s $1.99 service just so you can get what Shooter's talking about, so you can absorb it, understand what's going on in the market a little bit better, because that will help you for your longer term trading, even if you don't want to get involved with the swing trading. I hope that made sense.
It did. Fantastic point. 1.2 is I've started to cover the primary waves. I covered both growth and dividend in videos this month, and we'll continue to do that. So in other words, the entries that we're publishing in those articles based on the groupings, we'll be doing at least one of those a month. So some of those videos will, be non-swing trade based, just because some of the charts are complex enough. I think they need a little more explanation. So, those that we're posting there, we're going through those and doing that as well, just as a tidbit.
Great. All right. Have a great Super Bowl party weekend.
All right. You as well. Everyone else, until next time.
All right. Take care, everybody.
Have a drink for me.
I'm pretty dry.
All right, buddy.
All right. Take care.